and you're staying healthy and safe. Thank you for joining us for today's VIP roundtable discussion on understanding the ERTC incentive. And before we begin, I would like to let everyone know, as you guys just heard, that we are recording the session and we'll be sending out a copy via email to all of our FPA members through our e-bulletin. If you have any questions during the session, please feel free to use our chat feature. We're a small enough group that we'll probably be answering those questions throughout the presentation. I would also like to take this opportunity to recognize our Diamond Elite sponsors, Modulus Column and our very own Intersect Media. And now a big thank you in advance to our VIP presenter this afternoon, Fabry of Clarus, and a new FPA associate member. Anne has worked in the newspaper industry for more than a decade and understands our world and the challenges of our media industry and affiliates. Anne and I actually worked together at the Journal News. So first there was PPP, and now there's the ERTC. I'm just curious if you want to just go in the chat. I would love to know if you've already heard of the ERTC, just yes or no. Just go into the chat and just type in that. We're just curious to know if you knew about the ERTC, which stands for the Employee Retention Tax Credit. And here's what I know. Since the pandemic, the government has implemented various incentives to assist companies through these uncertain times. PPP loans are one of them, ERTC being another. And Fabry and her company, Clarus, helps businesses to claim this newer benefit, which can be very substantial. So I believe it's definitely worth the conversation with her, as you'll learn more during this session. So without further ado, let me turn it over to Anne to see how she might be able to help you and your media company secure this incentive. Anne, take it away.
Thanks a lot, Jim. Thank you so much for taking time out of your day to attend this. Hopefully I can give you some valuable information. As Jim mentioned, I have worked in the newspaper industry actually about 20 years. So I was a marketing director in circulation. I understand the challenges of the newspaper and media industries. It's, dear to my heart as far as just met a lot of great people and have a lot of great memories. Jim is one of those people. So I have a marketing background. I also have a financial background. I have a degree in accounting. So that was it helped me to transition to business incentives in 2011. And I've been working with businesses since that time, helping them to find money through either federal or state governments. So that's what I do. It's kind of fun. People are happy with what they get. And it's not something I have to convince anybody to do. So hopefully I can give you some information that's valuable to you today. I'm going to share my screen now and get started. As Jim said, please feel free to ask questions as we go along. You don't have to wait until the end. Happy to answer the question while it's fresh in your mind. So today we're going to be talking about the Employee Retention Tax Credit. And from what I can see, you've all heard of it. I don't know if any of you have already applied for it or are thinking about applying for it, but it's definitely something to consider. As Jim said, the government had offered the PPP loan because they knew that through this pandemic, businesses had really been suffering. And originally, when they offered the PPP loan and they came out with the ERTC, you were not allowed to take both, but they changed that. And a lot of businesses weren't aware of that. They thought that, I'm not eligible because I took the PPP. Well, that's no longer true. So what's our agenda? I mean, basically, I'll talk to you more about what the ERTC is, the eligibility requirements, which are different than the PPP. What could you get if you apply? What's the financial possibility? And then some things to look out for. What would be qualified? What might not be qualified? What it's like to work with us, if that's something that you ultimately would consider. And then, I'll take questions at the end as well as throughout the presentation. Okay, so what exactly is the ERTC, or the Employee Retention Tax Credit? It's just like it says here, it's a refundable, it's actually a payroll tax credit. Some people don't realize that. And it's basically giving you money that you paid in taxes back so that you can use it to run your business. And that's the deal. So a lot of this has to do with employees. Okay, and to make that point, if you're a business, and I don't think this applies, but if you're doesn't have W-2 employees, then you're not qualified. I've had many companies that had losses and have contractors, but don't have W-2 employees, that they would not qualify for this. So I'll let you know that up front. Okay, so the key thing is understanding the eligibility requirements. I cannot tell you how many businesses I've talked to who said, yeah, I heard of it, but I'm not qualified. And when I dig a little deeper, I find out that they are qualified because they either assume it's the same requirements as the PPP or that they got the PPP, so they can't apply for this. But the nice thing about this credit is that there are actually 3 ways you can qualify. You do not need to meet all 3 requirements. You only need to meet 1. Okay. So going through these, the first one is similar to the PPP in that it's, strictly data. What they do is they take a look at your gross receipts in 2020 and they compare them to the same quarter in 2019. Okay, so if you're looking at Q1 in 2020 and you're comparing it to 2019, which was what they consider to be prior to the epidemic or the pandemic, did you have at least a 50% decrease in gross receipts? If you did, that quarter could qualify for the ERTC, okay? And you go through this exercise for each quarter in 2020, okay? Then looking at 2021, the criteria is a little bit different. You take the same quarter in 2021 and you compare it again to 2019, which is the base year. But now you only have to have a 20% decrease in gross receipts to qualify for that quarter, okay? So you can qualify for the entire period of time. You can qualify for just 2020 or just 2021. You can qualify for 1 quarter or every quarter. Now, if you did receive the PPP loan, there is going to be an adjustment to the amount that you get from the ERTC. It doesn't mean you can't get money, but what they would do is they would take a look and they'd say, okay, if you got PPP in Q1 of 2020, we're going to look at what you got, and then they're going to make, they're going to prorate it. They're going to make an adjustment, and you may still get money for that quarter, but it will be decreased. They won't allow you to double dip to that extent. Okay. So again, you're still possibly eligible. This is the most straightforward way to qualify, but it's not the only way to qualify. The other opportunity, and I can tell you, I have a ton of businesses that qualify through opportunity number 2, and that's the full or partial shutdown due to government order. So as we know, many businesses were considered non-essential early on, or even throughout the pandemic. And depending on where you were, what you were doing, you were shut down. If this is the case, then this would be enough for you to qualify potentially for the ERTC. Also, another opportunity is let's say your business wasn't shut down, but your key vendor, the vendor there you get your paper from or whatever, you get something that's critical to your business was shut down due to government order. Well, that's enough to help you qualify as well because that impacted your business. So, key vendors, key suppliers, or your own business, anything affected by a shutdown or government order, it could even be for a short period of time. If it was 1 day, we're not going to make an argument like that. But if it was, a few weeks, and we still have businesses now that they were shut down and they were never able to recover, the same vendor, for instance, or they lost the supplier or whatever. So there could be ongoing impact from a short government shutdown order. So those are the things that you need to consider with this, but this gives you an opportunity to recoup some of that loss. And then the third opportunity is starting a new trade or business. So what I saw a lot during the pandemic was there were businesses that really had to pivot to stay alive, right? So it could be anything from a business that was producing, I had one that was a luggage manufacturer that shifted to making hand sanitizer, believe it or not. They invested in the equipment. They went and they made hand sanitizer. Okay. So they ended up, the business did great. They they were able to survive. They're now back at their core business, and I think they're keeping a portion of this. But this is an example of what could potentially qualify you for the ERTC. The only other piece of this that you have to keep in mind is that you have to have at least $1 million or less in the prior 3-year period. So it's generally going to be for a smaller manufacturer or smaller business. But if you started a new line of business and you're under that 1 million mark or at that 1 million mark, this would be another way that you qualify potentially. Does anyone have any questions? Because that's a lot of information right there. Does that all make sense? No questions?
And I don't see anything in the chat on the question front, but
Okay.
folks, because we're such a small group, please feel free to open up your mic or your microphone, and if you have a question, please jump in the pool.
This is Cheryl. I've got a question.
Sure.
Cheryl, what paper are you from?
Hi, Cheryl.
Tampa Bay Times.
Okay. Hey, Cheryl.
On the very first one, if our revenue did not fall more than 50% in 2020, did that just totally throw us out? I mean, is that an or an and between 2020 and 2021?
Oh no, they're looked at separately, and it's per quarter. So you could have had a successful quarter in 2020, but one unsuccessful quarter, and that one quarter would be qualified. Or you could have done perfectly well or not met the 50% threshold in 2020, but meet the 20% threshold in 2021 and just be qualified for 2021. So
okay.
It's not all or nothing. You can kind of make it work in a lot of different ways.
Okay, understood.
Okay, great. Anyone else?
Can I ask a question?
Sure.
We didn't start our business until November of 2019. So is everything based on in 2019? Because we only had 2 months, 2019. So we went through PPP, for both loans, and we've had to do everything based upon something in 2020 with a decrease or whatever, matching one quarter to another, but we could never match it back to 2019 because we didn't have a business for 2 months.
So a couple things. First of all, the fact that you said you did get a PPP loan.
Yeah.
Okay, the fact that you were qualified for that is a positive to me because it tells me you're more likely to be qualified for this based on, even considering that you don't have a full year of 2019. What I would like to suggest is I'd like to talk to our CPAs and get you a definitive answer on that. I don't want to give you the wrong information, but what I can tell you is I think that because you got the PPP, I would be more hopeful. So if you want to provide me with your email, I can get a definitive answer and let you know what they would say about that.
Okay.
Okay.
Thank you.
Sure, no problem. Anyone else? Okay, I'm going to move on. So here's some examples of things that would work for a government order and things that would not qualify. Okay, so, I don't want to read to you, but basically, if you're a manufacturer and the government shut you down directly, well, that qualifies, okay? If, you lost your opportunity, this is talking about, a research company that had to use a contractor, if you've lost your main vendor or main supplier, that's going to work. But if in case number 3, you just pivoted and had all your employees go work at home and you just continued on operations as usual, then you're not going to qualify. I mean, lucky for you, you were able to do that and keep going, and you didn't have any impact really other than, the annoyance of trying to get everybody to move from an office to home and maybe some minor adjustments, but that would not qualify, okay? Because you're able to continue your operations as usual. I'll give you an example of one of my clients. I have a pharmaceutical company whose main contractor or vendor was forced by the government to shift its operation to producing the vaccine, Okay, so then they could no longer supply what my client needed, my pharma company needed. So my pharma company is qualified because they were greatly impacted by a government shutdown, even though it was indirect, if that makes sense. Okay. All right. Any questions on that? Does that make sense? Okay. All right, I'm gonna whoop my screen. Okay, whoop. Okay. The news started you started a new trade or business. Okay, so it could be a situation where within your own business, you just kind of start a new branch. You know, you go after new customers and you start a new version of something, you pivot in a different direction. Any of those things would qualify. But the distinction here is that if you just take your current product and improved upon it, that's not enough. That's not what they're talking about. They're talking about an entirely new trade or business within your own business. So, you know, if you came up with a totally new media product and during this pandemic to try to approach customers that you don't normally do or that you're not successful with currently, that would qualify. But if you just, you know, made some adjustments to your current product, that wouldn't work. Okay. What I want to stress here, and this is a good place to do it, is that you can still qualify for this credit, even if you were wildly successful, believe it or not, in 2020 and 2021. I've had a lot of businesses who said to me, oh, I can't get that because I was profitable. It doesn't matter. I mean, I'm not saying that that's necessarily a good thing, but you know, for the long-term health of the country. But the fact of the matter is you could have been very profitable if you pivoted, and you could have made money hand over fist, and you could still get this ERTC credit because you were impacted in one of these three ways. So keep that in mind. Don't disqualify yourself. If there's a question, ask the question about it, and you may be surprised at the answer. You may still be able to get some money. Okay, so let's look at, you know, what do you have, you know, what's the opportunity, the financial opportunity? This is the fun part. So it is a fully refundable credit to the extent that it exceeds your tax obligations. Okay, so you're not getting back money that you still owe. You're getting something over and above. And the way this works is when you take a look at 2020, if you qualify in any given quarter, you can get up to $5,000 per employee in 2020, okay, for the entire year. So if you have one quarter where you meet the criteria and they take a look at the salary and they take a look at the impact, and then you can get up to $5,000 per that employee, okay? And if you have a lot of employees, that adds up very quickly, okay? If you're eligible in 2021, it's even more exciting because you can get $7,000 per employee per quarter. So every quarter that you're impacted, 2 quarters, and you have 20 employees in both of those 2 quarters, you're going to get 7,000 times 20 times 2. And you can qualify for 2021 and 2020. So you can see where this could add up quickly. One of the ways where I see a lot of impact, where my clients have gotten a lot of money, is, you know, a lot of times if, you know, they had a vendor they lost or something like that, and the impact they've never been able to recover. So they can actually make an argument that they were impacted all of 2020 and are still impacted, and they could get this for every quarter that they're qualified for. And you can imagine if they're a larger manufacturer or even a medium size, you're talking a lot of money. I mean, I just had a pharmaceutical company, I was telling Jim and Karen, that got an $8 million credit. I mean, it can add up quickly. And I had a small manufacturer that was really suffering just get a $300,000 credit. So we're talking chunks of cash here. You know, it's a lot. It can be a lot. And again, it would be adjusted for the PPP that you received, but it would not be eliminated. So you'd still have the opportunity, even with the PPP. Okay, so this is our gotchas page. All right, what are some things that you have to look out for when you're considering this? You can't double dip. Okay, we already talked about that. You know, they're going to consider the PPP. They're going to consider work opportunity tax credits if you take advantage of those. And they're going to consider things like research and development tax credits if you take advantage of those. So, you know, our company, you know, we know what you can you know, what you can use and what you can't. And we know how to eliminate pieces of this opportunity based on what you've already taken. So that's, you know, part of the job that we do. But just be aware that, you know, there's certain adjustments would be made based on other incentives. Substantiation requirements. This is important. You know, you're going to apply for this and you get the money. Okay. And that's it. Except if down the line there's an audit, right? We do everything with the idea that it's going to be audited. You might as well do the work up front and have all this stuff documented and all your, you know, T's crossed and all of that now. So we don't just do the calculations. We do a, you know, basically do a study. You know, it's all documented from the beginning. How did you qualify? How did you meet this? What, you know, everything is in a report so that if you ever had to defend it, you know, it's there. Now, what are the chances of that happening? In all good conscience, I can't tell you. I mean, you know, a lot of these things aren't audited, but there's always the opportunity that it could be. And you just have to be prepared for that. And as long as you've followed the guidelines and you've made sure that you can substantiate what you're saying, then you're fine. There's a lot of businesses getting these benefits. I can't imagine that they would be able to audit a large portion. But again, we do our business in such a way that we're assuming you're going to be audited just because we want to have it right in the event that you are. So that's another piece of this. The recovery startup, they made an adjustment to that. It's new lines of businesses that have started after February 15th, 2020. And you can claim it in quarters 3 and 4 of 2021. Up until quarters 3 and quarters 4 of 2021. You have to be aware of the eligibility differences between 2020 and 21, the percentages that are different, the fact that you get paid on a total amount per employee in 2020 versus per quarter in 2021. And again, here you count actual employees, not full-time equivalents. Okay, so these are just some ideas and some things that we're aware of and that you should be aware of if you're thinking of doing this. And, you know, again, don't assume you're not qualified. To me, that's the biggest gotcha. I've been in the incentive business now, you know, for 10 years, and every one of our clients has an accountant. Every single one has an accountant. And this is not a knock on accountants, because I actually have an accounting degree and I love them, but accountants have to know a little about a lot of things, right? And it's hard to stay on top of all these incentives because every time there's a new administration or a new state government or a new situation, there's changes. And sometimes these things get missed. So you need to be aware that there could be something you're not taking advantage of. And you also should be aware that, you know, really understand the requirements, because so many businesses exclude themselves from these opportunities when they really shouldn't do that. And that's why I'm in business, for that very reason. Okay, so I've already talked about this, but basically we've determined your eligibility. We figure out what's the maximum that you can get. And we are conservative in nature. We want to make sure that it's correct. If there's a question, we wouldn't go to that next level. You know, we want to be able to back up everything. And that's the way you should look at it if you do it on your own as well. You know, don't push it, you know, follow the guidelines. If you're going to use the criteria 2 or 3, where it was a government shutdown or a start of a new business, be able to document that thoroughly, make sure that you can, you know, back up everything that you're saying. Then you do the application, and, you know, you should have documentation of everything that you've put in that application. And, you know, as I said, we call it audit ready reports. And that's what I would recommend that you do as well. Oops. Okay, so when we do an audit ready report, these are the things that you want to make sure that you're considering. You know, qualified employer, make sure you are clearly stating why you think you qualify for this credit. which one of the criteria do you meet? And if it's the subjective ones, number one is numbers, dollars and cents, but number 2 and 3 are really subjective. So you've really got to go the extra mile in explaining why you think you're qualified. Obviously qualified wages, which you should be able to document through your payroll company. And limitation is what we talked about before. Did you take the PPP? Did you take an R&D credit? Did you take something else? If so, it has to be considered when you're applying for this. Do the calculation and then keep the source documents, basically. Whoop. Does anyone have any questions about all of this? This is a lot of information, I realize. Anything there? Okay. Sometimes the fees to have this done can, add up, because especially if you have a large credit. And the way this works is you're not going to get the money from this for probably 9 months to a year. And that's because of the federal government. It has nothing to do with the person that calculates it. They're just taking their good old time getting it out. They have a lot of applications. So sometimes, you have to pay in advance for the money that you're going to get later. So we, along with other companies, have, cash options, like a cash advance options to pay the fees if you want to do something like that, so that you can get the credit in and you can have your place in line so that you can get your money as soon as possible. So I just mentioned that. That's something you can talk to either me about or another vendor, whatever you choose to do. But keep that in mind, that shouldn't scare you away from actually going after the credit, the fee to actually do the calculations. The last thing, anything about the ERTC? I was just going to mention one other thing, but is there any other questions? Okay. One other bit of information just from the incentive world that I wanted to just pass on is that every state has incentives for economic development. And Florida is a little different than a lot of states because they kind of have a decentralized approach to that. Where if you're at the state of Pennsylvania, let's say, which is where I am, everything flows from the state down. In Florida, it's a little bit more at the county and local level. But what I would do is I would encourage each of you to make yourself familiar, if you're not already, with what each county and local government provides. There's all kinds of incentives out there that you may not be aware of. I just took a look. There's a rural and urban job tax credit. You may be aware of that, but if you're hiring employees and you're in one of these specific areas, you can get money per employee. There's a capital investment tax credit. There's research and development tax credits. If you're innovating something new, if you've come up with a new product or process in your business, and you're spending money on testing it, you can get a portion of that money back from the state of Florida and also from the federal government. So these are just some ideas. So I would encourage you to take the time to maybe go on your economic development site and take a look at what Florida offers at the county and local level and see if there's something there that you may have been missing. And that's all I have, Jim.
All right. Hey gang, any more questions? Going once, going twice, going 3 times. Hey gang, special thank you again to Ann and to our Diamond Elite sponsors, Modulus, Column, and our very own Intersect Media. Hope you found value in our session this afternoon. And Karen and I are always looking forward to hearing from our members. So please send us any suggestions for future VIP roundtables. Mark your calendars for August 4th and 5th. It's our Florida Media Conference, and it's in Ponte Vedra. Be safe, be well, and cheers to a better year ahead for all of us. Thank you, everybody.
Thank you.
Thank you.
Have a good day. Thank you.
Thank
Bye-bye.
you.